Hello traders, Gary Wagner here, just about 11:25 in Honolulu, 4:25 in New York. It is Monday, 6th day of March 2017, and this is the Daily Report for Gold and Silver. We have a tug of war, a push-pull scenario currently going on in the precious metals market, safe haven asset, so to speak. Gold closing off nominally, in essence, unchanged today. 1226.10 puts it down about 40 cents on the day. The low has been about 1225 and the high has been about 1237.30. So a very, very interesting day. We did have spot prices of gold down about $6-7, but the net result is still the same in terms of pricing itself. When we look at silver, we also see a nominal change with silver up about 6 cents on the day, 17.80. The low has been 17.73 with a high of 17.99 and a half. There is absolutely no doubt in my mind that we have this tug of war between bullish outside influences and bearish outside influences affecting the precious metals market, specifically gold. Gold currently trading at 1226.40. Putting it down 10 cents on the day. I'm going to label that unchanged. We talked about the fact last week that with this most recent decline from the top and the fact that we have a long position in the market roughly at 1250, that we would look to add to that position if and when we found supportive action, that the market has found tentative support, some sort of a bounce, and most importantly is moving back above that particular price point. Now, the only thing that I can say is we are seeing a stop in the decline of pricing, so to speak. We're looking at a daily chart, and the key level that we want to look at is a 50% retracement that comes in at around 1222. Now, this is a much shorter term retracement going from 1180 up to 1265, and then looking at the 50% retracement, as I said, that comes in precisely at the lows that we hit on Friday. We are a little bit above those lows today. So there is also some good supportive evidence on a technical basis of this price level. And I draw your attention to this particular top that occurred at the beginning of this year in January. And we can see that that, of course, was a pretty strong level. We also have the level of support that comes in February after the market came down from about, 1245. So putting that into context, it tells me that if we are going to find some support in this area, this is a logical place to look for it. And so I'm still going to recommend that we maintain our current long and maintain our current stop, which is below 1216. But I am not going to recommend adding to that position just of yet, because I have not seen any kind of a bounce in the market that would tell us that not only was a bottom formed and in place, but we are now trading off of that at higher pricing. Until that happens, I would rather have less risk under the possibility that we have further erosion in the market and do get stopped out of our current trade, which of course I'm hoping that isn't the outcome of this trade, but we are under pressure on the trade, to say the least. So traders, as far as silver goes, now silver did show a nice little spurt up today, trading up about 7 cents, 1781. But recall that when gold traded under pressure on Friday, it fell, I believe, about 1 1/3%. Here you see silver falling, and this fall, of course, represents, I think, almost a 4% drop in a single day. So this is a candle that is burning on both sides, burning twice as bright, but twice as volatile. And so we want to keep our eyes on silver. I still believe that in terms of really strong technical support in silver, it comes in at around 1750. And then we have this series of tops here that come in probably about 1740, 1738 in that area. So if we do find support in this area, because we do have a variation off a Three River Morning Star right now, that would be a signal for us to actually possibly go long silver. For the interim, though, maintain your current long position in gold, maintain your current stop. We are awaiting any kind of confirmation that a bottom is in place. Then we will add. If we see further slippage in the market, we will either exit our trade early to limit the drawdown or loss, but we will certainly not add to that position. In other markets that we follow, U.S. equities were down nominally off about 0.25%. We're looking at the Dow Jones Industrial Average. That did in fact close below 21,000 at 20,954, down about 51 points on the day. Standard & Poor's, pretty much the same net change here, down about 0.33%, closing off almost 8 points at 2375. And then lastly, the NASDAQ also closing off by about 0.33% at 5849. Dollar index is trading higher, but only nominally higher, as you can see, up about 0.1% at 101.66. And we truly have a mixed bag in the markets, with equities under pressure and with safe haven assets in essence unchanged on the day. I draw your attention to this daily chart of the Dow Jones Industrial Average. As I said, it is currently down about 0.25%, 51 points at 20,954. Now, on a technical basis, the one thing that really stands out more than anything else is this tremendous gap. We're looking at a daily chart, but this tremendous price gap. And as you know, as a technician, whenever we see this kind of a price gap, our consensus or belief is that traders will go and fill that gap, even if they fill it before moving to higher prices, or if that was kind of the end of the uptrend for a little bit and we've entered a correction, which is a very interesting take because the market has moved up so quickly and moved up with such a veracity in terms of the gains. So not only have we seen the market move up quickly, but we've seen tremendous gains over a short period of time that at minimum, if we see some kind of weakness in the market, it absolutely almost has to go back to 20,800 on the Dow. That's what it would take to fill this particular gap right in here. So traders, very few, as we look at the dollar index, this is one of the few markets which actually closed in higher ground today, closing up about 0.1% at 101.65. I draw your attention to our weekly chart that we are looking at. Obviously, this is only Monday, but we have one important fib retracement, which starts really from May of last year and concludes really at the beginning of this year, in which we saw the market move up roughly from 92 on the dollar index to 104. That's a pretty substantial move. That's about a 12% move because, of course, each of these hash marks, 104 to 103, represents a full percentage gain or loss in the dollar index. From there, when we look at the actual retracement that we saw, we had a 38% retracement. That is 99.22, and that's one of the reasons that we believe that there is strong support here. And then we have the 23% retracement level, and that's the level over the last week or so that the dollar index has moved above. Now, in as much as I believe that there's a high likelihood of the dollar index giving up some more ground on a technical basis, as long as it is trading above the 23% mark, which comes in roughly at 101, 100.96, we are on an upward trajectory with definitive and strong resistance at 104. So traders, as I've said, as far as gold goes, we are at a pretty critical area as it trades at about 12.22. Market currently is at 12.26 and change. So it is above this level that we are earmarking as our current level of support. Long as we hold above here, I feel sound that we will find support and we will see a bounce to the upside. However, if we do get a break below this particular price point, we could head to lower prices and we could see gold going under pressure. As we talked about at the beginning of the program, we absolutely have a tug of war between the outside influences such as the jobs report due out on Friday and next week's FOMC meeting, the raising of interest rates, of course, and I believe that that's what we saw happen on Friday of last week was the reaction to a high probability of an interest rate hike, that being the negative influences, and of course the bullish influences being a lot of geopolitical uncertainty, as well as some weird skirmishes here in the United States with recent statements by President Trump. All in all, it is a confusing scenario at best, and it will resolve itself over time. For now, obviously, we will maintain our long position and maintain our current stop. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.